Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
Carol, we got some good news from a framework with China.
Right.
We heard some details from that today. We heard details last night on Bloomberg from Scott Bessent. Kind of tough to keep track of it all.
Yeah, exactly. So maybe 2 steps forward, 2 steps back. I don't know how you kind of gauge this, but Josh Wingrove has to keep track of it all and help us make sense of it. Bloomberg News senior White House correspondent. He is there in our Washington, D.C. bureau. Josh, it's a lot today, but tell us about, first of all, let's go to the bad news, because it does feel like this is what's pressuring markets today. What's going on, and what do you know about U.S. and Canada negotiations?
Yeah, the news here is kind of out of left field, but Trump is taking issue with this Canada Digital Services Tax. This has been like a long-running thing, and it's not new, but the first payments are due next week, as our colleagues in Toronto are writing about. And so this is sort of kind of dovetailing with this news today of some sort of G7 agreement on global taxation and the global minimum tax that Trump and the Trump administration are sort of touting. I don't want to get too buried in the weeds. Essentially, Trump thinks that the Canadians are pulling a fast one on him, more or less, and proceeding with this at a time when there's other questions about how they should be taxing these kind of things, and that's what led to this. And it's kind of a surprise, because Canada was one of, a handful of countries that does not have a tariff deadline coming up, right? They are not included in the July 9th pause, with about 6 countries and the EU set to face potential higher tariffs on July 9th. China, Canada, Mexico have always been, or at least have lately been, separate from that. And so the question here is, what now? The current Canada tariff rate is 25%. That is to say, Trump's tariff on Canada is 25%, but there is a major exemption for goods traded under the USMCA trade pact. So a couple of options here, I suppose. 3, I guess. One is this could be a bargaining tactic, and they could reach some kind of a deal. 2, Trump could seek to raise that rate that applies to non-USMCA goods, so from 25 up to a different number. For instance, he's previously doubled the rate on steel and aluminum to 50 from 25. Or he could try to claw back some of those exclusions on USMCA trade. I think that third one would get a lot of blowback from American industry, in particular the auto industry, who were relying on these pretty integrated supply chains and saw those exclusions as pretty key. But this is a pretty explosive development here. Of course, just barely over a week since the G7, when Trump and Prime Minister Carney of Canada seemed to strike a pretty upbeat tone. But Tuesday is Canada Day. This is not a way to celebrate. I guess the Canadians are going to be upset by that, but we'll see. We'll see.
It's Friday, Josh. A lot can happen between now and Canada Day. Okay. I want to go into some details here. A group of 21 U.S. lawmakers wrote to President Trump earlier this month asking him to push for the tax's removal. This tax is similar, as you mentioned, to one implemented by some other countries, including the UK. It's equal to 3% of the digital services revenue that a firm makes from Canadian users above $14.6 million. So this would apply to companies such as Meta Platforms and Alphabet. I want to zoom in on what you said was sort of option number 1 here, the negotiating tactic. Is this the art of the deal? Because we've seen the president do this repeatedly over the last few months. You can remember what happened on so-called Liberation Day and the way that he backed away from some of those tariffs and put a pause on them. But he did get some countries to move.
Yeah, that's right. And we could be seeing that here. I should note also the Canadians thought there was like a 30-day clock, or at least they said so, on the heels of that G7 meeting, that we're almost, halfway through that 30 days. So Canada wanted some kind of a deal within 30 days, not only on that 25% and the exclusion for USMCA, but the other sectoral tariffs, in particular autos, steel, and aluminum, and the impact those could have. Trump has exempted USMCA autos, but may still tariff auto parts that are USMCA compliant. That's going to be a big deal for the Canadians. So they're looking for some kind of grand bargain here. And I think if it is option 1, if this is a bargaining tactic, Trump is putting another thing on the table here and saying this has to be part of any sort of grand bargain. Prime Minister Carney has been less quick than his predecessor, Trudeau, to hit with counter tariffs. He's been much more measured. But the flip side of that is he has room to do them if he wants to. So the Canadians right now have been silent last I checked in response to the president. We'll see where it goes. But he could be looking for leverage here. But the deadlines here are really kind of, made up. Trump says 7 days, but there's nothing holding them to that. He doesn't have to do anything within 7 days. The Canadians have said 30, but likewise, there's nothing holding them to that. As opposed to the other countries, the July 9th stuff, that is on the books. Those tariffs are going up on July 9th unless Trump does something to change it. So those ones are a different sort of landscape.
Well, let's go there, because the EU and the U.S. believe they can reach a trade agreement before that July 9th deadline. That's when the U.S. is set to impose a 50% tariff on nearly all EU products. That seems like maybe a very positive sign. Is it a positive sign? Because that's a big one.
It seems to be a positive sign. We've got on-the-record comments from Howard Lutnick, sort of striking an upbeat tone about it. Our colleagues, Alberto Nardelli and Jorge Valero in Europe, have some reporting today on the European view of it. They sound equally optimistic. What's not clear is are they reaching kind of like a China deal, like a framework type of deal, a pathway kind of deal, or are they actually getting down to brass tacks and getting something more comprehensive? That's not clear. And today we've had comments both from Trump and Bessent, Secretary Bessent of the Treasury, sort of signaling a two-tiered approach. Bessent saying, look, we've got like 12, 10, 18, something like that, big trading partners, and they might look to wrap that up by September 1st, he said, Labor Day. And that raises the prospect of extensions for some countries, bigger countries, maybe ones that are making headway. On the flip side, it's about 6 countries in total that are facing a tariff hike. And Trump said today, look, I might even raise them before July 9th. We don't expect that, but he sort of threw it out there. And he said that he kind of wants to do maybe even 25% tariffs, and it's Bessent's nicer than him, and Bessent doesn't want to do it. And so right now we've got this sort of multi-track thing, right? You've got a group of countries that maybe are smaller trading partners that are facing a July 9th deadline, and Trump is signaling that he might want to put a higher tariff on them. Then he threw out the number 25% today, up from the baseline 10. Then you've got other ones, presumably including the EU, that will either reach a deal or maybe get an extension, with talks continuing throughout the summer. Then you've got the China situation. They put some ink to paper a couple of days ago on their framework, but there's another deadline coming in August, so there'll be a fresh sort of mile marker there. And then you've got the Canada one, and I should add the Mexico one. Both of those not with firm deadlines, but now Trump pledging something on 7 days in Canada, and Mexico separately, rumors of some kind of steel deal, and we don't know where that stands right now. So a lot of moving parts on this. Remember, they talked about 90 deals in 90 days. So far, we've got like 2, that are not necessarily full baked. So this is complex stuff.
All right.
Complex stuff. But Trump loves tariffs. Remember that.
Josh, you're sitting down to dinner, or you're, at a bar with a friend tonight, and they say, hey, are we making progress on trade, the United States? They actually getting something done in a good way? Do you say yes or no?
No one hangs out with me anymore because I just talk about this stuff all the time. But I think, yes. I mean, Bessent is talking about wrapping this all up by September. So we could potentially, it seems, yes, they could be. But remember, Trump is clearly itching to want to just send a unilateral number, Liberation Day 2.0, maybe a number not as high as the initial numbers he put out, but higher than 10%. And so that combined with the fact that we still have more sectoral tariffs coming, and the fact that he's demonstrated a penchant for wanting to just raise them on his own, like with steel and aluminum, the number of tariffs look like they're going to go up, not down going forward. I think that markets should be aware of that.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The Supreme Court getting ready to wrap up this term, and they did come down with 5 different rulings. A big one was the U.S. Supreme Court limiting the power of judges to block government policies nationwide. They did leave unresolved a fight over President Donald Trump's restrictions on automatic birthright citizenship. But this all gets to, Tim, specifically what's going on in terms of presidential power. We did have the president hailing the decision as a monumental victory and said the administration would move to get blocks lifted on a number of his policies. Here's the president earlier.
Thanks to this decision, we can now promptly file to proceed with numerous policies that have been wrongly enjoined on a nationwide basis. And some of the cases we're talking about would be ending birthright citizenship, which now comes to the fore.
That was President Trump just a little earlier today commenting on this U.S. Supreme Court limiting the power of judges to block some government policies nationwide. Let's bring in right now Harold Krent. He's a professor of law at the Chicago-Kent College of Law, also the author of the book Presidential Powers, joining us to talk these latest Supreme Court decisions. That's exactly where I want to start. Birthright citizenship. This is something that during this term, President Trump has really gone after. What is your interpretation of what the Supreme Court said today when it comes to what many had deemed as a constitutional right of birthright citizenship?
The Supreme Court did not directly address the question of whether the ban on birthright citizenship is constitutional or not, and most observers think it's not, but the court refused to wade into those waters. Instead, what the court held was that the courts below erred in issuing a nationwide injunction against the executive order by President Trump. Certainly, this is a victory in a sense for presidential power. It denies a court the ability to enjoin a president nationwide, while the president on his or her behalf can obviously affect the nation with one fell swoop, as President Trump has with all these executive orders. Now the attacks will have to be in a piecemeal fashion.
So what does this mean then? I mean, does this in any way embolden President Trump potentially to move on? I guess what I'm trying to do is carry this out. What other actions might come forward, when the Supreme Court comes back, the next term that they might need to be addressing? Like, what does this do in terms of enabling him to move forward on maybe different initiatives that maybe before this ruling he might not have done?
So there are a number of maybe 10, 12 nationwide injunctions that are in place right now in terms of stopping President Trump from cutting funding for various initiatives, stopping him from firing federal employees, stopping him from reassigning employees. And right now, those will no longer be binding. They'll only be binding to the extent that plaintiffs were properly situated in the court. In other words, those people who filed suit will get the benefit of the injunction, but no one else. So going back to birthright citizenship, that all those who joined the case as plaintiffs challenging this policy will still get the benefit of the injunction. But the fear is that after 30 days, if those plaintiffs, other than those plaintiffs, the president may try to strip citizenship and remove people from the country because they're no longer protected by the injunction. The natural response should be either to file a class action or perhaps to have states sue on behalf of their citizens. We don't know if that will be successful or not, but that will be the important reaction to the Supreme Court's decision today. So all litigation will have to go now more in a sporadic fashion to counter the presidential assertion of authority, and only when all courts have spoken, or at least when the Supreme Court has spoken, can a president's policy be stopped across the board.
I want to follow on Carol's question a little bit, Professor, and talk about presidential power and the consolidation of presidential power. How does this court, these 9 justices, how do they seem to define the power of the president in a historical context of the presidential power that we're traditionally used to as Americans with 3 co-equal branches of government?
Yeah, obviously we've seen a shift here in it. It's shown in various ways. It's shown in the fact that the Congress no longer apparently has the power to limit the president's ability to fire whoever he wants to in the administration. And that's been true of these agencies such as the National Labor Relations Board, the Federal Trade Commission, and many more. It shows up in the fact that, again, in this case, that courts can't order injunctions nationwide against presidential policies that they find illegal. And it's shown up, of course, in the presidential immunities case last year, which suggests that to a scary extent, not fully, but to a scary extent, presidents are above the reach of the criminal law. So in all of these facets, we're seeing a more, the court is embracing a more powerful president at the expense of Congress and even the judiciary itself. This is not to say that Congress doesn't have levers. It's just that Congress, as we know, is not using whatever levers that it still has remaining to it. And that's, again, emboldening the president to take even more power.
All right, so you wrote the book on presidential powers. We're talking about this, what this decision means. And I just wonder, so, and maybe this isn't your bailiwick, but I do wonder, Professor, whether we need to rethink kind of government in terms of balance of power. We thought these three branches would just do it. It worked for a long time, it seemed to. And yet now we're seeing it come undone. And to be fair, this isn't the only administration that has used a lot of executive orders. But it does seem like the presidential position has gotten a lot more powerful. So are there changes in our government that you see need to be forthcoming, including the judicial branch?
I mean, it's possible. I think that what most people think is that the first step would be a reawakening of the legislative branch. We always thought that the legislative branch was the most powerful, at least intrinsically the most powerful. And that's certainly what people thought at the framing when our country was formed. But Congress has taken a back seat, and it's allowed the president to seize more and more authority. Tariffs is a perfect example. It hasn't fought back over tariffs. It hasn't fought back over the question of sending migrants to third countries. It should. And I think that would reassert the kind of, by reasserting Congress into the mix, I think it'd be a more healthy separation of powers balance to our government. So, that would be the most logical wish list, is for that to happen. I don't know if it will. Congress is not, so far, maybe it's going to happen with this big, beautiful bill, but Congress hasn't really seized the reins and tried to assert itself in this mix.
This one really has to do with what, if anything, we learned from the justices and the discussion among the justices. I know people are still making their way and learning about what was decided and what came out of the Supreme Court today, what we learned about the Supreme Court, but did we get any insight into the way these different justices have approached presidential power that differs today than we've learned in recent months or in recent weeks?
A little bit. I mean, the court is still fractured. There's still obviously a very, very conservative wing and a liberal wing, and a couple of that we call swing justices that will change. And so the configuration of the court was different on two delegation cases, the challenge to the $8 billion of subsidies that the FCC gives to rural areas and to schools, where three justices, conservative justices, dissented, but the remaining judges, the liberal judges and the middle judges, came together. And that was true in another delegation case to an agency as well. In that case, it was a delegation to a group to decide what preventative care services must be funded by an insurance company. So those are two important cases where the middle held out. But in terms of overall, I think the issue that we could see, particularly from the injunction case, is that a majority of the court is content to have a very strong president over atop the government with very few guardrails. And that's what we have to watch, and that's what we're concerned about. And now that these nationwide injunctions will be dissolving, we'll have to see if the president moves vigorously and rapidly to try to carry out his policies, despite the possible very, very negative impact on people like birthright citizenship, for instance, or federal workers who have been fired, and so on.
Yeah, I would expect, too, there's going to be a lot more discussion, debate about this going forward on both sides of the political aisle, perhaps. Harold Krent, thank you so much. He is professor of law at Chicago-Kent College of Law, author of the book Presidential Powers, joining us once again, joining us several times here on Bloomberg. We are grateful to his analysis.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Allie McCartney's with us. She's managing director and at also private wealth management at UBS. She is working, and we're curious to see what she gets out of this event. Like, when you come here, hello.
Yes.
What do you get out of an event like this?
So UBS and I traffic at the intersection in liquidity events and in individuals. And so what does that mean? That's entrepreneurship. And so one of the beautiful things about this event and about our partnership with it is Michael Loeb opened by saying this is a celebration of entrepreneurs and entrepreneurialism, right? And so if you go through all of the things that are happening in our world today, all of the trends, deglobalization, being a big one.
Right.
Right. Where does wealth come from in this country? It's intellectual property. It is 6 million businesses founded last year. It is being at these events and having funders and founders meet, providing very valuable networking opportunities. And for us to be able to be supportive of that community full stop is really the bread and butter of what we do at UBS.
Does it give you new opportunities to bring new money into your firm? Or is it more like, okay, when I'm allocating my clients' assets, I'm thinking about these alternatives because I talked about these types of businesses with people at this conference?
So yes and yes. I would say there are three things it does. It is certainly, a prospecting, right, rich environment in terms of there are people here who obviously we know the numbers of the success of startups and franchises, but some of these people are going to be the next unicorns, right? So there's that. The second is it allows me to learn about AI or why the founder of Tesla, founded Tesla and what he's thinking about now. And then the third thing is it allows me to find new opportunities for myself and my clients to be outside of this environment, both educated and proximate to the new trends that are driving sort of where the puck is and how we'll invest, for sure.
It's funny you say the founder of Tesla because Elon Musk was not actually the founder, was he?
Well, so no.
Or what did he like?
So it was very funny because the first panel was someone who's just spent 7 months in the White House.
Yeah.
And so Elon Musk was the topic of conversation there. And then the next man after was the founder of Tesla, who
Martin Eberhard,
who very elegantly decided not to answer that question.
He did?
Yes, he did.
That's really funny. What's funny, too, is, and I think about wealth management, you do have, I'm assuming as clients, a lot of folks that are founders, and whether they're looking to sell their company, find a deal, or maybe you have other clients who have money they want to put to work and they want to have a piece of a company. A lot of that is what goes on, right?
Oh, a lot of that is what goes on. So I think, if you think about the path of a founder, of an entrepreneur, right, you have an idea, there's something disruptive, there's some challenge or problem you're trying to solve in the world. And, we were learning today that most people self-fund that by using credit cards, personal assets, and their 401k, right? They make less than $100,000 for years and years and years. And they are just so embedded in their company and the mission and the branding that they're not thinking about the tax consequences, whether they can take advantage of qualified small business stock. Could the business be stuck in a marriage in court and decided by the state of California or Florida if they don't have a prenup? So what we do is we say, look, if you are extremely successful, you're going to get to a liquidity point where some lawyer or some general counsel or Anderson Tax is going to say, have you talked about the planning and the this? And at that point, you can maybe add a couple % of value. But if you can find these people as they're stuck in what I call the valley of death, sort of that middle part of building a business, and you can get an hour with them just to say there are a couple things we can do from an investment perspective, an entity perspective, and a tax perspective, that if you are as successful as you think you are, you can protect yourself and investors and you can make your net much bigger than what it would be otherwise.
As you know, entrepreneurs are not focused on this stuff when they're starting a company. So if they haven't taken advantage of something like the QSBS, as you talked about, which I believe allows you tax-free up to $10 million. I mean, it's pretty remarkable.
It's pretty remarkable. There are there are 3 litmus tests that you have to pass.
But if they didn't set up the business that way initially, can they change it to actually get that benefit?
Yes. It becomes increasingly difficult as you take in capital, you have more LPs, etc. But there are many, many ways to do it. And I think most people know about that $10 million headline number. But the earlier you plan, and the more that can actually be protected by using different IRS discounting strategies, et cetera. So I've seen many, many times that protected. But again, so our goal is to try to be in front of entrepreneurs and support them, not only in funding and marketing and building their networks, but to try to get them either to think about, which is really challenging, or get them to sort of open up themselves to allowing someone to act on their behalf even when they're not there yet.
So we'd be remiss to not ask you about kind of the macro environment and what that means for entrepreneurs right now. We've got about a minute and a half left. We're getting ready to wrap up the trade today. It's been a volatile one again, and we're also getting ready to wrap up the trading week. How do you feel about the environment? What do you tell some of your clients?
So it's a really hard environment in the following. So you look at your portfolio today, private and public, and your public portfolio just hit an all-time high. Your private portfolio, you haven't gotten as much capital back as you wanted. You've been in longer. It feels a little, but your values, your marks are still, they feel okay too. But you feel pretty precarious about both. And so that's affecting the way everybody at every income level is spending, investing, traveling, you name it. So the answer is, our market is priced to perfection from a trade perspective, from a geopolitical perspective, from a big, beautiful bill and spending and deficit perspective. The next, I think, 6 months in terms of the path that the Fed takes with interest rates, whether our president actually does put in a shadow Fed and what effect that has, what happens in terms of the July 9th trade date, right? We're probably at about 10% level of tariffs right now. That's different than the 38 we were on, thinking about on April 2nd. It's also really different than the 2.9 we came into this presidency with. So there are a lot of really macro trends that are going to very much affect the next leg from here in both public and private markets.
Great conversation. Allie, thank you so much. Allie McCartney, Managing Director, Private Wealth Management over at UBS, joining us here on Bloomberg Businessweek Daily.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Michael Loeb is with us. This is his home. This is his event. He's the founder and CEO of Loeb.nyc, and he co-founded Uncharted a few years ago. And I got to talk to you this morning, so I feel kind of doubly blessed to get some more time with you. The event is underway. Tell us about what you're hearing, some of the things so far.
Well, I think that there's a great deal of buzz. Most people are saying exactly what you are, which is that they're doubly blessed just to be here and get to know everybody else. But I mean, if you were to take a look in the background, you would see, 600 people talking to 600 other people. It's quite the event, and what we really want to do is foster relationships between investors and companies, between companies and companies, and between CEOs looking for talent and talent looking for CEOs. So I think a good time is being had by all, and certainly the weather has been totally cooperating. I think you had something to do with that, so I thank you for that.
You're very welcome.
Right. So, little tiny windy, if you could take that down just
I'll take
a touch.
some wind.
This is kind of perfect. It beats the weather we had earlier this week. I was a little concerned about that.
Yeah.
An event like this, you've been doing this for a few years. It started during the pandemic, started a lot smaller. How do you, and I heard you say earlier today, and your partners say this too, Noah, that he's running into people constantly. You say they raised money as a result of being here. They found a co-founder here. They found employees here. How do you measure the success of an event such as this in the days, weeks, and months following it?
Right. I wish we could, because I should have a VIG on all that. Don't you think? I mean,
Yes.
So we were just talking to Damon John, like, Shark Tank kind of thing.
Yeah.
Like maybe you could kind of get in on that.
You've known Noah for a long time.
Right. So, I got to tell you, we do solicit testimonials of exactly the things that you're talking about. We have quite a few of people saying, I met my founder there about 2 years ago. Noah and I get an invitation, and it was shrouded in mystery, and it was 3 women who had us go to an event downtown, and they brought us up on stage. Everybody started to clap, and what that was is these were 3 women, never met before. They were all, elite athletes, and they decided there should be a fund supporting elite athletes, that they had a different point of view, a different sense of how to compete, and they all got along very, very well, and that thesis led to a $50 million fund. So it's that type of thing that really propels us.
Well, talk to us about capital. How much is out there for startups?
Wow. It's funny. things go in cycles, as you know.
Right.
This is not an up cycle for capital formation. Last numbers I looked at, and they're a little bit stale, but down 60 or 70%. Certainly the secondary market, if that's any indication at all, does illustrate that, there's a lot of illiquidity looking to get liquid.
Right.
Not nearly as frothy as it used to be was IPOs, even though that's starting to unlock a little bit. So no, it is hard, and the money does gravitate these days to AI. So you need, if you have
So
AI,
when there is an idea, when there is a startup, that's where it goes.
it goes there, right? And what folks don't, I think, really realize or appreciate is the forces at play in venture and venture funding and venture capital, which is, I sometimes call it a beauty contest, and that is because there's one breakout winner in a category, and then all the LPs are asking their GPs, what is your AI strategy? And if the answer is, we think it's a little oversold, we think it's a little bit, frothy, where there's going to be a couple of winners and a lot of losers, we're taking a wait-and-see attitude. The answer is bye-bye, I'm bringing my money to that fund that made that investment. So a lot of pressure for them to jump in, and it's in those situations that, not so good deals are made. Right. So, yeah.
Does it, in terms of cycles, does it feel like this AI cycle is different than previous tech hype cycles? And the reason I ask, and look, nobody wants to hear or utter the phrase, this time is different, but if you look out at the private markets right now, you've got sky-high valuations, I think many would argue, for OpenAI, right? For Anthropic, for Perplexity. You have meta platforms coming in and dropping billions of dollars to buy 49% of an AI company that barely existed. You have founders being poached. We're talking $100 million signing bonuses for an individual to go to a large company.
Right. So I look at my mailbox every day. I'm looking for my $100 million check. Hasn't come in yet, right? So if you can arrange,
you just gotta
that,
make your web browser or your website .ai, and maybe it'll happen. I don't know.
Done.
So to me, and this is not quite answering your question, but it's all about me, so I'm going to answer it from my perspective, which is that to me it feels different. Now, what does it feel like? I've been around for long enough, so I'm something of the elder statesman here. I've been around long enough that I've seen a few cycles. This feels like the late 90s, and the late 90s was the advent of the internet. Right. And it feels this profound. Now, people can say, well, if we look back 2 or 3 years, it was NFTs, and that was a false positive. And before that, it was blockchain, which was sort of a false positive. And before that, it was cannabis. And before that, it was Bitcoin. And but this one feels real. And this has the possibility of disrupting entire industries. I had breakfast, by the way, with a friend this past week. He has a unicorn. Business is worth almost $2 billion. He has 270 people. And he said, Michael, by year end, it's 120.
Meaning he is going to lay people off because AI has become so efficient.
Fast-growing company, super fast-growing company,
That's
unicorn.
Scary. That's really scary.
I know, but that's what's going on. And
so do you think there is something? Do you think there is something to what Dario Amodei has said, who's the founder of Anthropic, among the co-founders of Anthropic? There are many. That in a couple years, we're going to see a serious uptick in unemployment as a result of this tech. Like, this is something policymakers need to be freaking out about right now.
Yeah. Well, look, I respectfully disagree, and all I have to go on is history. And starting in the 1700s, right, when there was that industrial revolution in England and we burned down all the factories with a spinning wheel thinking everybody would be unemployed, that has not happened. But markets, employment, people have an amazing ability to retrain themselves, find the opportunities. In the end, I think we're going to be okay. Is there going to be some displacement? There's always some displacement. I hope you find something that we can have less lawyers, because we use less lawyers. But I think at the end of the day, brilliant people are going to find their way. And the people you're talking about are very smart people, engineers. They will find their way. We're always going to need them. And this is going to be like every other labor-saving prediction. This is going to be just another one.
All right. We're going to unfortunately have to leave it there, but thank you for inviting us. This has been fun.
Thank you for inviting me. All right. See you guys.
I believe this is yours.
Oh, that's not what they told me. They said after today, it's all yours. That's not right?
Michael, thank you again.
I wouldn't be so nice.
Oh, the keys, please.
Thank you.
Michael Loeb, founder and CEO of Loeb.nyc.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.